What's going on, everyone? Today is December 13th. It is your midweek review. It is Wednesday. Hope your week has been good, both inside and outside of the markets. A couple things before we get into the charts. Tomorrow, we have 8:30 a.m. core retail sales, regular retail sales, and unemployment claims all being released at 8:30. And then on Friday, we have an Empire State Manufacturing Index being released at 8:30 also. We have a 9:15 industrial production month on month. And then at 9:45, we have flash manufacturing PMIs and flash services PMIs. Just some news events that are going into the back half of the week. And then obviously today we had FOMC, we had some PPIs, and then Tuesday we had CPI. So very volatile week so far in the market. A lot has happened. Can't wait to catch you guys up. Other than that, same thing goes with me. We'll see you guys on the call on Sunday too. Other than that, I don't really have any announcements on my end. Just kind of going through the emotions right now, getting ready for the holidays, gearing on that way. Other than that, that's about it for me. Henry, you have anything?
No, all for me. Getting settled in up here, and we'll see you all on Sunday.
Alrighty, so DXY weekly. Can you see the screen, Henry?
Yeah, you're good.
Okay, so on the weekly, we had pulled up into this weekly imbalance, like we had talked about prior. A couple weeks prior, we were talking about this weekly imbalance. We had noted this previous week's high. We've also been eyeing the equilibrium from the yearly low to the yearly high, noting this order block. So now there's a couple more things I want to note. Obviously, you can see following today, we got a little bit more sense of direction and displacement in the direction we are wanting it to. So price has gone lower on the weekly. You can kind of see how it's starting to pan out. I know that the week has not ended and closed yet, but just something to note. I'm going to start to use the bottom half, the low and the open of this candle as an order block and start to see what it does with regards to behavior and closure on lower time frames. Other than that, with regards to the draw and liquidity, I'm eyeing this low right here, right? That would be obviously sell side. And then we have an inefficiency down here that we could draw to. But there's a lot more information on the daily. So this is the weekly CIBI that we had just talked about. That's on the weekly. You can see we pushed up into it. Notice how we were talking about this high. We never got any closure, right? Price just wicked up there a couple times, touched that weekly order block, or excuse me, weekly CIBI. And then from there came lower. So this is just an internal draw on liquidity to continue going lower, right? So this is that weekly potential order block that I'm eyeing. For right now, I want to see lower prices continue, and I would rather price on a daily remain under with regards to closure, the equilibrium 103,500, the previous week's high. And I would like to see how we react on this weekly order block, if we can start to pull lower, attack the sell side. I'm also using this extension 102,278. I'm pulling it up from here, right? So this last upward movement, I'm taking that as a fulcrum point, extending it down and noting that the -2 extension is also right under this sell side liquidity. So main point of focus is the sell side liquidity. Obviously, then from there, it goes into this extension point. And then I would look at that weekly BISI that has yet to been tapped into. If you're also looking at where price could push up into, aside from that, right, you have a volume imbalance right here that has now been balanced. Right, so price might want to push up into there and then go lower and create some form of fair value gap in the form of a CIBI, or we could push up higher and test this equilibrium again. It's just dependent on how deep price wants to retrace higher, but I would view any price movements higher as a retracement. I would like price to hold this high and continue going lower, taking out obviously the 102,400 sell side liquidity, the 102,278 extension, and then the weekly BISI, and then we can work our way down lower if we choose to. But really my main focus is to understand if we want to try to push into this low by the end of the week. If that's the case, I would not want to view any deeper retracement other than just this volume imbalance, and then I would want it to kind of pick up speed and remain heavy-handed to the bottom side. Other than that, that's it for me on dollar, just kind of watching waiting. I know we've had a lot going on with regards to indices. It's been a lot more volatile. We've been moving a lot more. Dollar obviously is pushing, but not pushing as aggressive as the indices are, and that's for Henry to cover. So Henry, it's all you.
Okay. Here we go. Just let me get my screen share. All right, moving into the indices here, you can see that the bias we've been talking about and the higher time frame buy side targets have been playing out. Today, this is a monthly chart, but you can see on the daily chart when we get down to that today we've reached through the monthly high that we've been referencing since back inside of here. And now what do we have left remaining above to continue to work toward? Well, if you look back, further back, you can still see buy side remaining above the March 22 candle and then above the January 22 candle. So these swing highs are going to be buy stops resting above those. And so you can see price continue to work up toward the buy side above there to allow anyone who was long from here to offset their positions above these highs. So next, price can trade up toward this high and then following that toward this high next. So those levels are marked here. 47.65 3/4 and then 48.02 1/2. You can see too on the monthly chart, we're creating a new monthly BISI, assuming that price does not trade all the way down here, which I would expect it not to do so, considering it's in such close proximity to the buy side up here. But it is important to note that one is being created, because now that we have traded up through this high, you have to be aware of higher time frame inefficiencies resting below, because after we trade, we've now traded to the buy side, and as we continue trading up toward the buy side, there's the opportunity for price to have a retracement back down into higher time frame inefficiencies. Weekly chart, you can see here we've purged that monthly high right there, and then just reaching up to into this one here back from March, we fell just short of it. So I'd expect that likely gets purged probably tomorrow. And then let's see what else on the weekly chart. We've now had a really nice expansion away from the buy side imbalances that we had previously been referencing. So at this point, if we're thinking about the price delivery wheel, right, consolidation to expansion, and then either consolidation or retracement, we're not expecting a reversal yet at this point because we're in such close proximity to the buy side right here and then up here. And so it wouldn't really make sense now for price to trade back down to these areas up in here. So first I'd be looking for a buy side to trade up here, and then for the opportunity of a retracement back down into some higher time frame inefficiencies down here. Okay, daily chart. Today, Wednesday, we purged the high right here and then just fallen short of the buy side resting there. You can see today we opened with a volume imbalance right there and then moving away quickly. And then in the previous days, not showing any effort to reach down into this buy side imbalance that was created right here. So we've had a really nice clean expansion away, very bullish price action, which makes sense because we are in such close proximity to the buy side. Remember how we talked about in either this last week's or the previous week before on the Sunday call, we talked about how we get in when we get in close proximity to a target that we're expecting, we want to see price move quickly to it because it's going to reprice quickly in order to not allow the opportunity for liquidity resting above to be moved without being engaged, right? So there's liquidity resting above here in the form of buy stops. Price moves quickly to reach that point and allow for long positions to be offset above the highs. And so as we get close, we don't want to see any deep retracements anymore. We just want to see a speedy move up toward the buy side, which is exactly what we saw right here in the past week. Okay, now there's some inefficiency resting below. We still have that buy side imbalance right here on the daily chart. A new one formed here along with the volume imbalance as well. But now since we're in such close proximity to the buy side, I wouldn't even expect this to trade before buy side trading here. This, you could potentially see price move up into here, form a new buy side imbalance in here, and then return into that before trading up to buy side up here. But this 47.65 3/4, I'd like to see that trade before price coming back down into this area. The last thing to note on this is that now that we've traded up through that monthly high, while I remain bullish on this, you have to switch into a little bit more of a neutral bias, right? Not immediately thinking, okay, it's time to go short, but you can't be as bullish on this up here as you could necessarily down in this area because we're in such a deep premium at this point. we've already reached above the buy side targets on the monthly chart, and we're creating all these higher time frame inefficiencies below. So there's such an opportunity for retracements and for a return back into the discount now that price has moved up into an area where long positions can be offset above the highs. And so while price can continue up into here, we have to start slowly transitioning to more of a neutral bias now that we're in such a premium. Okay, that's it for ES. I'll go into NASDAQ really quickly. You can see the same thing has occurred here. We've gone ahead and run out the buy side above this high right there and right there, relative equal highs this week, running through it after trading perfectly down into the midpoint of this weekly BISI right there, which we talked about last week. You can see how price moves nicely off of there right up into the buy side, just like you would see on any other time frame, right? This is all fractal, so you could see the same sort of price structure, relative equal highs, returning into a buy side imbalance, and then trading up. You can see the same thing occur on a 1 minute chart, a 5 minute chart, a 15-minute chart, anything. Same thing you're seeing here on a weekly chart. When we drop down into the daily, I'll transition that over. Daily right here. Price trades down into the buy side imbalance and then starts working up higher. You can see a new BISI created here, a new one here, and then a new volume imbalance created as well, right there. So NASDAQ has been the leader above ES, trading through that monthly high, not today, but on Monday. So getting a nice expansion through there. And then with the current contract that we're on, oh, I meant to mention this as well. We've now had contract rollover, which means that more volume is trading on the current monthly contract than the one we were trading before. So previously, we were trading the ESZ 2023 contract, and now we've moved over to the ESH 2024. And then NASDAQ, we were trading the NQZ 2023. Now we're trading the NQH 2024. So we've reached that expiration in time to switch over to the new contract. So here on NASDAQ, you can see that even if I go back to a monthly chart, there's just no price data available for anything for price to reach to beyond the monthly high, which we've already reached above. And so I don't typically do this, but what I would look for is I'd just go to the continuous contract, which is NQ1 exclamation point on TradingView. And you can see kind of what's available for price to trade toward as we continue higher. So on a monthly chart, you have these highs up here. And then on a weekly chart, you have this SIBI remaining above here before those highs. Right? This isn't the one that you want to trade off of, and normally you want to be on the current monthly contract because you see the current inefficiencies and the details you need to see in order to get an accurate read of price and the local PD arrays around it. But just to see what's still available, we can look to the continuous contract and see that there are still all-time highs above and that SIBI there as well. So still looking for prices to reach higher on NASDAQ. We're getting that nice expansion away. And now that we're trading up through that monthly high, just be aware of the inefficiencies below, but still expecting price to reach higher up into this area up here. That is all for me. Carson, any last thoughts?
No, not really. Don't, in this scenario, and when indices are doing stuff like this and you get these long runs on price, you kind of get this underlying feeling of like you want to participate. Price is moving in a lot of different places, and that's what it's supposed to do. It wants to get you to kind of entice into it. Do not, be patient. Price will show you when and where it's ready for you to participate. So don't feel as if you need to go and jump in or you're missing a move or whatever the case is. Just stay calm, know your model, and follow it. Other than that, that's it for me. If you aren't watching these calls and you aren't watching our Sunday calls, I really do encourage you to go back and watch them because what we point out on these calls 9 out of 10 times unfolds, and that's a great learning experience for you if you're actually paying attention on where we're calling price to go, and seeing it unfold in the future is one of the greatest learning things that you can have. So please, I encourage you to go back, watch these calls, and see when we're calling price to go to a certain level, and then how long it takes for it to reach that level. Other than that, we're just in the holiday era, so I'm just kind of laying low. I'm in no rush to take trades. I am in no rush to make a lot of money. This is a very, very hard market to trade right now. It is, like you said, we are in a very bullish market that is in a very, 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 very high premium. So you've got two things clashing. So there's no reason for you to try to be a genius and try to figure out where it's going to go next. Let it give you more data. Continue following the dollar, see what it wants to show you, and over time, you'll have plenty of more trades. That's the best thing I can tell you, is that there's plenty of more trades. We have all next year, so don't feel as if you have to go and try to get it all now just because the market has a big monthly candle. There'll be plenty of more big monthly candles. Other than that, that's it for me. Just stay safe trading, stay safe outside the market, and feel free to, ask us any questions. Stay active on social. And that's out for me. Stay active on the training exercises.
Sounds good. All right. We'll see you all on Sunday then for our regular weekly call.
See you on
Take care, everyone.
Sunday.